It's time to buy tech stocks, and I'm going to explain exactly why and how, what you should look for. All of that in this video is going to be a ton of value, so you want to stick around for this entire video. So 2020 was really the year to accumulate these value type stocks, your dividend type stocks. We even got an opportunity here in early 2021 to buy great dividend companies. I'm talking Procter & Gamble, Pepsi, Clorox, Costco, the list goes on and on. These are your boring stocks, and over the last year, they've kind of been chugging along okay, while tech has absolutely been flying, and that can be seen from the Nasdaq's performance versus the other indexes. But now, this isn't 2020 anymore, we're in 2021, we're just about to enter April, and the opposite is happening. Tech companies, those high flyers, those high growth businesses, they're out of favor now, and value is where everyone wants to plow their money into. These stocks, like we just talked about, Procter & Gamble, Altria, Raytheon Technologies, Lockheed Martin, all these value picks are absolutely booming in recent weeks. So this kind of made it crystal clear to me where the big money, Wall Street, the influential investors want to plow money into, and it's clearly not tech stocks. So as individual investors, you and I who have time horizons, as long as we really want, we're not obligated to show returns in the next 12 months. We're not obligated to, be the best performing investor so that other people trust us, put our money with us and all that stuff. No, those are things that hedge funds have to deal with. We as individual investors have an advantage in the sense that we can actually recognize these things and do the opposite so that we can build strong positions at really good prices. So in a nutshell, what do we do right now, guys? We buy tech stocks. What I'm going to do is give you 5 pointers, what I specifically look for in these tech stocks. I'm not buying any random tech stock. There's very specific criteria that I look for, and I'm sharing that in this video. The idea really is don't chase. If you missed the boat on value stocks, so be it. You're going to have your chance again at some point in the future. That's just how the stock market works. But if you missed stocks that are up massively, making you all-time highs, that are starting to get overvalued, but they're still value stocks, just let it go. What you do need to recognize though is that tech stocks are doing what value stocks did last year. And we need to really focus right now on these stocks, find undervalued plays here, which there are plenty, and I've made a lot of videos in recent weeks about this. And we really want to build our positions big before tech is back in favor and we see a massive boom recovery in these stocks. The idea is you want to get in before the recovery happens, not ride the wave as the recovery happens, because the best gains are always realized if you're kind of able to beat the majority of the market before these stocks run. And that's really how true value is found in the market. That's how you make massive gains in the market. That's how I've personally done it. And that's why I'm up 27% on 3M, 49% on Starbucks, 34% on AbbVie, 52% on McDonald's, 33% on Raytheon Technologies, and the list goes on and on. These are boring stocks, but because I was patient and I bought into these stocks, I built my positions when they were out of favor and no one really wanted them, they have rewarded me handsomely for having them in my portfolio and diversifying outside of the traditional tech-only plays. Yeah, these are boring companies, not gonna deny it. But I like boring, I like stable. These companies all pay me dividends as well. So just kind of gravy on top here, and I'm loving my diversified portfolio right now. So the way I'm kind of positioning myself for 2021 is I think I'm gonna let these positions just do their thing. They're gonna do extremely well here this year, I believe. 2021 is gonna be the year of value in my opinion. I think there's gonna be a few of these big tech companies that kind of get into this value bucket, but the majority of tech, the majority of growth stocks, they are hurting. And we're going to take advantage of that, guys. So before I get into all that content, just take a second, smash the like button. You're going to find a ton of value. Let's get into it. So tech stocks, my circle of competence is really strong with technology. I understand tech. I love tech. I live and breathe tech. I even started this channel technically as a tech channel. I'm a huge tech fan. So naturally, I have pretty big exposure to tech stocks. And over the last few weeks, it's hurt quite a bit to see my portfolio down, but that's okay because I realize that these things kind of come in waves, and this is just one of those downward waves. But here's the thing, because I buy strictly when I see value, strictly when, there's actually some discounts in the market, My worst performing stock right now is actually just down around 13 to 15%, somewhere around there. And it's Splunk. It's a stock that I actually started buying fairly recently. It's kind of taken a nosedive, but because I don't just blindly buy into stocks on all the hype, as stocks are going higher, everyone's saying buy, 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 I typically start to be like, I don't know if I want to buy that. That's why I'm only down 13% on my biggest loss in my portfolio. Majority of my positions, including tech stocks, are still up a pretty good amount. But regardless, guys, what I want to really teach you is to focus on strong moat businesses, whether they're in tech, not tech, doesn't matter. Focus on these strong best of breed companies, because that's exactly what smart investors do, and that's exactly how money is going to be made over time. So right now the market's just throwing a tantrum. They're like, tech, who needs tech anymore? Our economy is reopening up. We don't need tech, guys. We're living in a tech forward world. We use tech in every aspect of our lives. These companies are going to be as relevant next year, the year after, as they are today or last year. And as long as you're investing in these sort of future-proof businesses, you'll be just fine. And just so you know, I'm not just spewing this out of nowhere. I'm personally been gobbling up a ton of tech shares over the last few weeks. All the new cash that's coming into my account is going to these tech companies. I'm building up big positions there. So here's what you got to look for in tech. So first off is very important, and I think a lot of investors fall to this trap. Look for industry leaders with a proven track record. Gone are the days of, you buy into a stock with a story. A story only goes so far, but you need to have some sort of proof, track record, established, business with something to show for to really succeed over the long term. The second, like I mentioned earlier, is look for strong moats. Moats are incredibly important, especially in times of uncertainty. Companies like Amazon, their moat, no one's gonna beat Amazon, guys, come on. Walmart may be able to compete in some sense, but Amazon is just so far ahead, they're just so diversified, they're dominating in their fields. That is a strong moat business, for example. To do this, you kind of want to find companies that, sell a product, a service, maybe they have a strong brand, things that just can't be replicated by someone else. And even if they can be replicated, there's just no way that people will switch to that competitor. They will stick with this business because they've just established themselves in society. The third thing I do is I look for strong growth companies that are growing their revenue year over year with strong free cash flow. So free cash flow businesses are going to be a huge advantage here in this environment, because it shows that they're able to generate profits, and if they have any debt on their balance sheet, they're able to manage that and pay that down regardless if interest rates rise or not. Also, these companies with strong free cash flows are ones that are going to be acquiring some of these smaller companies, competitors in their space, and we're already starting to see a little bit of this start to happen here. Over the last year or so, we've started to see these massive giants start to buy up some of the smaller companies, like Salesforce buying up Slack, like Microsoft trying to buy up Discord, like Amazon buying up some smaller companies as well. There's a lot of these acquisitions taking place right now, and I think a lot more to come. And as these big tech companies get even bigger, as these strong free cash flow companies in tech get even stronger, they're gonna have that cash balance to buy the competitors and become even bigger. It's just kind of a snowball effect. In terms of revenue growth, I typically look for 15-20%. That's a pretty reasonable amount. If a company is able to achieve that, great. If it's able to exceed that, awesome. That's typically what I look for my tech plays. The fourth thing is look out a few years. Don't just look for a sharp V-shaped recovery, because we may or may not see that. No one can ever predict these things. Look for companies that you're able to hold for, say, 3-5 years or so, and not have to worry about it. You don't want to wake up every morning worrying about if your investment's down 50%. That's just absolutely ridiculous. Not something we do on this channel here. I focus on companies that, hey, maybe it's down a few percent, and that's typically a buying opportunity. So if you focus on these strong companies, they're not going to really be down 50% in a single day unless there's something drastic happening in the world, in which case probably bigger things to worry about. Now, I mentioned this earlier, I think the rest of 2021 could be kind of a pretty poor year for tech. We could kind of recover a little bit, but I think, we could just move sideways for the most part. Maybe the Nasdaq actually closes in negative for this year. It would not surprise me after its performance the last few years. And that's a good thing, because it allows the fundamentals of these companies to kind of catch up to their valuations, and it sets us up for another massive bull run at some point in the future. So as long as you focus on, say, a 3 to 5 5-year time horizon, it's hard for me to imagine these companies not doubling in size, especially when we're looking at these best of breed companies. Because like I said, they're just gonna keep getting better, they're just gonna keep growing, keep improving their free cash flow, and just be better businesses overall. The fifth thing that I look for, which is very important, is balance sheets in a company, and having a company with little to no debt is honestly one of the best feelings in the world. There's a few companies that I own that have no debt on their balance sheet, and it's kind of like, you see these stocks, you're just like, how are these not valued higher? You gotta buy into them, because eventually the market realizes that and those stocks move much higher. And this kind of brings us back to interest rates. You know, interest rates rise. A company with little to no debt doesn't really matter to them. If they have the free cash flow, they have the cash balance, they can cover that little bit of debt. If they have no debt on the balance sheet, even better, does not affect them at all. So although, you know, people like to invest on just a name of a company, the hype, the story, all this stuff, the fundamentals are really what separates a good investor from a mediocre investor, and a good investment from a mediocre investment. This is something that I've learned over my investment career. This is something I want to share with you guys in this video. And if there was any value found at all, consider sharing this with a friend, because I think this can actually help a ton of new investors pick out good investments, build out strong portfolios. And yeah, I want to reiterate, this is the time to buy tech. At least that's what I'm doing. Anyways, guys, hope you enjoyed this video. Remember, none of this is financial advice, just kind of what my play is in the market, what I'm sharing in my VIP group. If you're interested in joining, the link description down below and the pinned comment as well. But either way, I wish you all the best. You've weathered through the storm so far. I think we can get through this together. So just stay strong, guys. Anyways, thank you so much for watching. Don't forget to invest positive, and I'll see you in the next one.